I'm blind, I can't see. Ooh. I mentioned in another video that if you go into your car, you drive on a small street, you're going 180 miles per hour and you can't see anything, then someone is going to die. It's the same thing in business. If we can't see, then our business is eventually going to die. So we talked about in another video the game of business, that we need to kind of learn the language of business, which is accounting. We need to go and understand the business we are in. Then I had an example with Enron, the smartest guys in the rooms, that said, like, the only difference between me and the people judging me is they weren't smart enough to do what we did. So with business optics, which this video is about, what does that mean with business optics? The thing is that in a business, as we talked about in the Enron video, you want 3 pieces of paper. If the business you want to invest in doesn't want to give you the 3 pieces of paper, then you should be a little bit worried. It's a red flag. So you want 3 pieces of paper. You want the balance sheet, you want the income statement, and you want the statement of cash flow. The thing is that if I have these 3 pieces of paper, it's like, yeah, now I have 3 pieces of paper, right? On a higher level, then people manipulate these pieces of paper, right? So it's not always true what is on these pieces of paper. We'll get back to that later. The thing is that these pieces of paper have numbers on it. And that's good, right? That's why, like, I mentioned that if knowing accounting, knowing how to put the numbers inside these would make you rich, then all accountants would be rich. And they are not. So that's not the key. So even though we have numbers, then, and we have these 3 pieces of paper, then as a business owner or an investor, there's no value in a number. The value is understanding what to do about these numbers. Because if this is if we like, kind of like relate this and say, okay, so these 3 pieces of paper is like a business map, a treasure map. And I'm looking at this treasure map and I'm like, that's a very awful treasure map. There's no X on it, right? There's no X, right? And then you can say again what you want about Elon Musk, right? And he has the X, right? But I have a treasure map, right? And optics is understanding that on this treasure map, there needs to be like an X that says dig here, right? So the purpose with getting these is so that we can see problems in our business. So we need to understand the numbers, and then we need to figure out how it relates to different kinds of problems with, like, our receivables, our payables, how much money are we getting, paying for our assets, what's the return on our assets. It gives us optics, right, to get these 3 pieces of paper. That's why we get it. We don't get it just to get numbers, right? So the purpose is to plug profit drains. So when I was working in a dog biscuit factory, then we had these pallets that, so imagine we had a lot of boxes of dog biscuits and we would put them on a pallet. And then we send those pallets out. So I was looking at the numbers there, and then I saw that every time we send out one of these pallets, then we were charging 50 euros or $50 for the pallet. And I was like laughing. I was like, what the heck, right? That's very expensive for a pallet, especially because most of them just left Denmark, right? So we never got them back. And then I went in and I looked at, okay, so what do we pay for those? And then I figured out that we were paying like the $50, 50 euros for the pallets, right? Like, what the heck, right? So that's, it's not a drain, but it's like a loss, right? So it's like an opportunity to maximize the cash flow, right? So I found a place where they were making these used pallets, and they cost close to nothing. So they cost 1/10 of the thing for. And then when you look at it, okay, so before we were sending out these pallets where we would pay 50 euros for it, we would charge 50 euros at the customer. Now the new pallets I got, we paid 5 euros for, but we still charged 50 euros for them at the customer. So now we were making 45 euros per pallet. And then if you multiply that with like sending out 20 to 40 pallets per day, 300 days per year, right? It becomes millions soon that you're like making on that, right? But that's the value in understanding and like looking at the numbers. It's like, oh, that is much. Can we do something? But because the other thing is like we could also be like competitive and then like lower the prices of that. So optics is we need the optics to plug the profit drains, maximize cash flow. We need to increase our returns. We can also use optics to anticipate crisis. So the thing is that I'll get back to that in the next video, but we have something called like trends and relationships. So there's like trends over time. So when we put one row of numbers makes no sense, right? But if we have two rows of numbers, then we can see the difference between before and after. The same thing, we did some optimizing in our installation company where I changed some of the things we did, and that increased our revenue with like 300% with a few changes, right? The same thing, like sometimes people get lazy and then the numbers get worse over time, or the competition, the market change. One of the general sense in business is that people forget that they have competition and they're just running around in their own little world. In Denmark, there's a book called Palle in verden, right? In the world, right? So Palle is alone in the world. He wakes up and then he's alone in the world and there's no one else there, right? And then like doesn't really work out that well for him. But we need the optics to anticipate crisis. We can use the optics to spot danger signals. We can use it to optimize performance, as I mentioned with the dog biscuits. It's the same thing with the Airbnb. We have like some short-term rentals. Then I could see with looking at the numbers and like looking at some other numbers, I could see how the houses perform compared to each other. And then I would look at, okay, so this one is performing better than that one. I could see that from the numbers, and then I could use that to drive the results and change the things on the other short-term rentals so it would go up and perform at the same level as the other one. And then we can use it to maximize enterprise value. So people often think that we need to go out and gain more revenue. We need to sell more stuff. But actually, like with the pallet example before, a lot of the value in business is actually found on the inside of the business. So if we go in and we look at what we already have and optimize that, then usually we can actually make a lot more money on the short term, just optimizing and maximizing our enterprise value instead of going and grow this thing. So with optics, to get the optics with the accounting, then first of all, we need an accounting system. And it doesn't really matter what kind of accounting system we have, depending on if we're small or we're a big company, but we do need an accounting system where we take the numbers we get and we put it inside. But a lot of small business owners, if you're a small business owner, then you know that just putting the stuff inside the accounting system is not very useful, right? It's just complicated. And sometimes you would give it to your bookkeeper, hey, here, right? Put it in the system, right? But putting it in the system doesn't really help us. It doesn't give us optics. So we still can't see anything. So the next thing is that when we get this data, we put it in the accounting system, then we need to organize the data inside the accounting system. And then we need to ask our bookkeeper, our accountant, to take this data and then turn it into information. So we need like maybe the 3 pieces of paper, maybe there's some other numbers that we think is very important for our business. But to get the optics, then we need to take the data and we need to turn it into information. Then as a business owner, then we can look at this information and then we can start to analyze the information. We're like, what does this mean? And then when we analyze it, then we can evaluate it. And when we've analyzed and evaluated the information that we got from the data, then we can turn the information into knowledge. So that means on the basis of this, then we can actually make a decision. And when we can make a decision, then we can take action. So, and with the action, then we get insight into our business. So that's why it's very, very important to have the optics. And in order to get the optics, just to summarize this slide, we need the data. We need to put the data in the accounting system. We need to organize the data. We need to turn the data into information so we can analyze and evaluate. When we've analyzed and evaluated the information, then we turn it into knowledge and then use that to make a decision action, and then we get insight. And that is very, very important. It sounds very, very complicated, but it's not. It's a little bit, but it's not. So when you learn what to look for and like simplify some of the ways to do it, it's not that complicated. One thing with accounting. So accounting is not a scoreboard. Accounting is a report card. So it's like in school, right? So accounting is just a report card. So when most people, a lot of businesses, they use it as a scoreboard, but it's not, right? So it's like you get your yearly report at the end of the year, and you're like, oh, it's like school, right? Did I get an A or B or C? So accounting is just a score, right? You just get a number, right? And in school, when you passed your exam, you get A plus, A, B minus, right? So all we see is a score from the accounting. We don't know what we got right, and we don't know what we got wrong, if that makes sense. So the key thing is to ask the question, what are the activities that caused the numbers? So what did we do the previous year to get the numbers we got? So what activities gave us good numbers? What activities gave us bad numbers? And that's the management's job. So the management in a company, doesn't matter if there's 1,000 people or you're one, the management's job is to make decisions and turn those decisions into activities. And then take those activities and turn the activities into numbers. Then the accountant's job is to come in and create an income statement, a balance sheet, and a cash flow statement. So the accountant is taking the activities and turning them into numbers. But remember, as I mentioned a lot, that if the key to getting rich was knowing accounting, all accountants would be rich. So it's not, right? Management's job, business owner's job, is to take these numbers and then change the activities. So one of the keys to getting rich is to look at numbers and change the activities. So the numbers you get, if you don't like them, then you look at, what caused these numbers? And then you change the activities. If you like the numbers, you're like, maybe I should do more of this. And then you change the activities. And when you change the activities, then the accountant goes and looks at what you did with activities and convert it into numbers. Then you look at the numbers, you're like, maybe I should do this and this. So you change the activities. Then the accountant goes in and turns the activities into numbers. And you look at the numbers, you're like, ooh, and then you turn it into activities, right? So that is all about the optics, right? So we need to have an accountant or do it ourselves, take the activities, turn it into numbers, and then take the numbers and turn it back into new activities that would like grow our business. So accounting is not a scoreboard. Accounting is just 3 pieces of paper with numbers in it. So accounting is, we can call it a transaction reporting mechanism. So accounting gives us the like report card on the transactions we did the previous year. So we can say that accounting is like stepping on a bathroom scale, right? So I get the papers, but the papers themselves doesn't tell me why I'm fat. Why am I fat? The scale just gives me a number. Right? So as a business owner, there's no value in a number. The value is knowing what to do about the number. So in the next video, I'll talk a little bit about the scoreboard of business and financial optics. Because financial optics is looking at trends and relationships. So we will talk a little bit about that in the next video, and then we'll get into balance sheet, income statement, cash flow statement.